Hello and welcome to Let's Talk Business. I'm Priyanshi Sharma and let's begin with how the markets performed today. Well, benchmark indices were little changed after swinging between gains and losses. While healthcare and pharma sectors advanced, banking shares were under pressure. Hiral Dadia joins us from the BQ Prime newsroom with a wrap of all the market action.
An absolute lackluster day of trade is what we witnessed, and we ended pretty much mixed but flat amidst volatility. If you see in terms of today's session, Nifty 50, we were still able to hold those 18,650 levels in trade today. And you had Sensex as well, which ended below the 63,000 mark. The advanced decline ratio overall was pretty much in favor of the bulls, but clearly there is that consolidation which has continued, and being a truncated week, being a week where we will see F&O expiry, that's the reason the volatility has remained high. Overall, if you see in terms of where sectors were concerned, it was mainly the auto as well as the pharma pack, which was showing some kind of strength in today's session. But apart from that, you had a lot of pressure that did come in terms of, in terms of the other sectors as well. You had RIL, which dragged, whereas ICICI Bank, M&M led the positive change in the markets. Let's look at the top gainers. Cipla, Adani Enterprises, Hero Moto, Tata Consumers as well as M&M were the top gainers, whereas NTPC, RIL, Power Grid, TCS as well as Coal India were the top losers in trade today. In terms of the newsmakers, BPCL was in focus on the back of a maintenance shutdown that they will be taking for 35 days. Railtel on the back of an order win. Adani Power has started commercial operations at their Godda thermal power plant, so good moves came in there. Parag Milk Foods was up in trade as Sixth Sense Ventures has bought additional stake. And you had drone companies like Parents Defense, Zen Technologies, which were up in trade on the back of the government order where export delicensing has been taken over. Zydus saw an up move on the back of the acquisition. ICICI Securities at a 14-month high as the parent is considering delisting. And you had Shree Cement, which was trading under pressure on the back of the tax probe. So overall, a lot of movers and shakers in trade today, but a market of consolidation, and this is something which is expected to continue as per analysts. Back to you.
Thanks, Hiral, very much for that. And meanwhile, BQ Prime's Neeraj Shah also spoke with ICICI Prudential's Anand Shah about the financial and manufacturing sectors. Shah also spoke about private capex not being up to the mark currently. Listen in.
I think a couple of things. One is corporate banks. So while generally people are positive on banks, we've been more inclined, including some of the state-owned banks. I think that's our belief is we are a little bit contrarian versus, given that they've already rallied and people believe that they've reached a point where the valuations have no room for expansion. Our take is a lot of these corporate banks would surprise positively on the earnings front over the next 6 to 8 quarters, given that the net slippages would be fairly low. The credit cost will be significantly lower than what we have seen in the recent past. So that's one. Other, as I said, multiple number of companies within the manufacturing and manufacturing allied, which constitutes more than 56% of our portfolio, where I agree it's not as contrarian as it was maybe a couple of years back, but all these companies have delivered earnings growth rate, and at the aggregate level, the stock price performance actually is lagging the earnings growth rate. To that extent, the valuations remain still compelling. So there's no reason that since they have rallied significantly over the last 2 years, we need to exit those companies. So I think they still remain part of our portfolio, given the market is still underappreciating the turnaround on balance sheet. Their balance sheets have improved, turnaround in their return on equities. I think that's a very, very important ingredient in any business and any stock price, particularly today. We are more conscious of return on equity now than ever. Both the quality of balance sheet has improved, the return on equity trajectory has improved for these businesses, and that is not yet reflected on the valuation. I think, again, it's a trend. The China plus one, which we've been sort of talking about, and to be very honest, the quick question which I get is, where is the private sector capex? And obviously, it's not to the extent that one would want. But if you see MNCs, particularly in manufacturing, have announced capex. it's very easier for them, given that they already have a captive market, and they can ship some of their production base immediately. And to that extent, those capex decisions for the multinational manufacturing companies would be much more easier than an Indian manufacturer who has to still today go out, prove itself, get some order, and then put up a capacity. So I think, on the contrary, when we scan the market today and we see the capex announcements of manufacturing companies across, MNCs stand out. Actually, MNCs have been ahead of the homegrown manufacturing, at least in the listed space, in terms of committing money on the new capacities, expansions, brownfield and greenfield expansions, given that for them it is easier to sell those capacities than their homegrown businesses.
Moving on, a whistleblower has flagged a bribe-for-jobs scam at India's largest IT company, TCS, the Tata Consultancy Services. Now, this quote-unquote scam is not about bottom-line hit or key managerial personnel issue. That's what the company has said. It's a larger issue for the industry. To understand this better, BQ Prime's Muralidhar Swaminathan spoke to two staffing industry players. Listen into what they said.
I think clearly, like audit firms have, let's say, limited period that they work and they're reshuffled, I think all large IT companies which have spends like this in billions should encourage that they shuffle their partners, clearly out 5 years or whatever that period they think is right. They should also ensure that the people who interface with these staffing partners are rotated, job rotations as they do it. These are the functions which are vulnerable. Nobody should stay in the job for too long, so that's second. And we should ensure also that, the alumni do not become suppliers to their own bosses. That's another way where these entries get made all the time. And a proper due diligence of a multi-department due diligence, if they can do while onboarding, these suppliers will be of great help. You shouldn't leave the decision to a single point discretion. And obviously there should be a widely, documented, transparent whistleblower policy so it can be identifiable as soon as it's detected. An ombudsman policy which is known to people, and every year they should actually ensure that no single supplier should have more than a single digit share.
As large corporates, it's our responsibility to ensure that malpractices are curbed, and I'm sure there will be history why Kamal is saying, but I personally have been in touch with a lot of colleagues, friends in this industry, and I believe that over a period of time, for multiple reasons, for our own reasons also, people had tendency but have moved on from there. And a lot of these players, us at top, we do try to ensure these practices are not encouraged. And as pointed out, a couple of points, whistleblowing to having rules and regulations in place, to implementing robust, systems of overviewing the things, and having some kind of audit mechanism, internal as well as external. They all together come in for to ensure it doesn't happen. It is not good for either parties.
And moving on, it's Europe, which is now playing a major role for the Indian IT sector when it comes to deal making. IT behemoths Infosys and TCS have signed deals worth nearly $700 billion. BQ Prime's Tushar is here with the details.
For India's IT sector, Europe is stepping up where the US has lagged. Earlier today, both Tata Consultancy Services and Infosys announced new contract wins in Europe from Standard Life and Denmark's Danske Bank in times of a slowdown. TCS will transform Standard Life's operating model, onboarding more than 400,000 policyholders onto a new platform built upon banks, its proprietary suite of BFSI services. The deal will also see TCS set up a customer operations center in Germany and a digital platform for policyholders in Germany and Austria. For Infosys, the Danske Bank deal will bring in $450 million. Infosys will also acquire Danske Bank's IT center in India and bring on board its 1,400 employees. The company will deploy its generative AI suite, Infosys Topaz, to transform the IT operations of the company. The deals underscore Europe's importance in Indian IT's scheme of things, especially when deal making has slowed to a trickle in the US amid fears of a recession. So far this year, TCS has struck at least 5 large deals in the continent, while an equally large deal was scrapped in the US. Infosys recently acquired Base Life Sciences in Denmark and Fluido in Finland and opened new proximity centers in Sweden and Norway.
Looking at the stocks in focus today now, shares of drone makers surged in trade today as the policy for export of drones was liberalized by the centre. The policy has been simplified for drones or UAVs that are meant for civilian end users. The move aims to promote India as a global manufacturing hub. BQ Prime Sajith Manghat spoke to the president of the Drone Federation of India, Smith Shah, to understand his views. Listen in.
Can you give me a sense of how the entire industry is, how many players are there, and when we talk of this easing of relaxation that is coming in, or this easing of regulation which is coming in, how many players may be positively impacted because of this?
See, India has more than 200 companies in the drone segment. If you look at some of the very early stage startups, including some of them that are being run out of academia, the number goes about 300 plus as well. These are people who are either into manufacturing of various types of drones, or they are into software development around drones and all. So there is a big potential that India has. And you must be aware that in the last 2 years, basically, the government, industry and academia have come together and have set a vision for India to become a global drone hub. Now, becoming a global drone hub is not going to happen by having the best technology being used in India, but it's going to happen by making the best technology in India and using it in India and exporting it to the world. So this export policy is also in line with the vision of the central government, the private industry and the academia, for India to become a global design, development, manufacturing and export hub for drones and drone technology in general. So positively, this is going to impact almost the entire sector, because here in the drone ecosystem of the country, the vision overall of the entire group is to become a major technology developer and exporter, and not just a technology user. More than 50% of the people who are doing indigenous manufacturing with a very high indigenous value and high content is going to be very positively impacted. And there were many export requests that were coming to our Indian startups. I mean, with this policy regulation, it is going to ensure that the seamlessness of trying to demonstrate a technology and export a technology to the potential end user outside India is going to be very easy. And that's going to sort of attract a lot of players.
And that's all we have for you in this segment of Let's Talk Business. Thanks very much for watching.